Welcome to a special Indianomics. The July inflation number at 7.44% was uncomfortably ugly, even for a market expecting a high number. So let me start by drawing up the positives and the negatives from the numbers. First negative, of course, July CPI came in at 7.44%, an ugly number, versus the poll of 6.66 and the June reading of 4.8%. Now, the positive, the July CPI, as you can see, is 2.6 percentage points or 260 basis points higher than June. But of this 260, about 230 basis points or 2.3 percentage points was contributed by vegetables. Next, negative again, not just vegetables, but cereals were also up. 13% higher for cereals. Pulse is also up 13%. So it is a broad-based food inflation, not just vegetables. But then the counter positive, core inflation, that is CPI, excluding the volatile food and fuel elements, was down to 4.9% from 5%, which was our poll, and 5.1%, which was the June reading. Actually, the Jan reading was 6, so it's substantially lower. Net, should we worry about rate hikes or about rates remaining higher for longer than we thought? Will the Reserve Bank keep liquidity tighter than we thought? Will the newly introduced incremental CRR, cash reserve ratio, continue for longer than September? Is there an incremental impact on yields and hence on growth in the coming quarters? To answer these questions, I have with me an elite panel, Mridul Saggar, a former Reserve Bank of India MPC member, now professor at IIM Kozhikode, Neeraj, Gambhir, the head of Treasury and Global Markets at Axis Bank, Upasana, Bharadwaj, chief economist at Kotak Bank, and Sakshi, Gupta, the economist at HDFC Bank. Okay, the banks are clearly well represented. Ladies and gentlemen, thank you very much indeed for joining me. Mridul, we have to begin with you because you know how to think like the MPC members think. See, will they just look through because it is all vegetable? Cereals, we are told, can be pretty sticky. So is this a little more worrying than just a transient number, the food inflation?
Definitely, we are likely to be more worried, not just we outside the RBI, but even RBI probably would be more worried. In essence, this is a food spike which is larger than what anybody has anticipated. And the issue is, would it last or not? See, ideally, it's true that the MPC would look through any transitory inflation, and it's the right thing to do as they did in the last policy here in August. But a couple of things really worry me now. And one is clearly that, any statistics which is not deterministic has outliers. So this time what I am seeing is there are outliers and outliers when you look at IMD maps. So if you are looking at the heat map which IMD gives, then clearly it's loaded with yellows, which means largely deficient, more than 60% deficient, or it's the cobalt blue, which means large excess. And week by week, we have seen this pattern really disturbing. So it is possible that this food inflation may last a wee bit longer than ordinarily what we were expecting, that September correction would come. Now, it's anybody's guess what the policymakers might do. I think they would wait and watch for at least till the September data, but the September data would come after the October policy.
Yep.
So a lead call would have to be taken by looking at the data before that and take a decision in October what they need to do. I mean, liquidity, as you mentioned, is an easy way out. So you should keep things tight by mopping up all surplus liquidity. And I'm glad that the incremental CRR was raised to do that. There are other tools, so it's not necessary that you need to sort of hike CRR or incremental CRR retain for longer. But yes, the policy rates would stay where they are for longer, for sure, if not on the up.
Okay. Let me come to Neeraj a little later. Let the economists have their say. Upasana, Your thoughts on whether this is a little more than just a tomato vegetable inflation? See, on cereals, I did have Dr. Gulati and Harish Damodar and such other agricultural economists. The fear is that the rice crop, the procured rice, some of it was broken rice and not really of edible quality. And the forthcoming rice crop, although the sown area is higher, some parts excess and some parts deficient, as Mridul beautifully explained. So, and wheat, if El Nino hits now in July or starting from August, then wheat could also be deficient. So, are we building up for something worse than just a transient inflation?
Yeah, Latha, I mean, firstly, all of this is based on a little bit of speculation because we really don't know how the weather conditions will pan out. And hence, at the moment, to take a final call on how things will pan out in the subsequent 2 months is going to be very difficult. Having said that, yes, it is not just vegetables, while they have been the biggest contributor to the 7.44%, but it is cereals, pulses, and spices, not to forget that.
Yes.
I mean, all these three categories have been contributing consistently to headline inflation. And that is something which we'll have to be extremely careful about because pulses, cereals, they tend to have a much more structural impact on inflation, while vegetables we know, will correct. If not in 1 month, they will correct in a couple of months ahead.
Yep.
But we will have to be much more closely watching how the cereals and pulses will be panning out, and plus spices, like I said, because spices too has been consistently on a month-on-month basis, if we see, have been moving significantly higher, and we're not seeing any signs of abating there as well. So all these three other categories are also to be very closely watched out for. But again, just to note one thing, last year, during the September period is when we started seeing the Kharif sowing pick up significantly. So, we still can see any side of this, we can see things pan out in whichever way from here on.
Okay.
So we'll have to wait and watch. Clearly, there is a very significant risk. But I think a wait and watch policy is what even the MPC and RBI would also go ahead, at least for the next 2 months.
2 months. It's actually, I'm worried about beyond that. Spices, by the way, as Upasana was pointing out, 21.6% higher year on year. And as she's been pointing out, month on month, it's been rising. It's just that the weight is 3% or 3.5%. So I ignored it. Cereals, obviously, 12%. So weightier. A final word from you, Sakshi. What are the dangers of inflation getting generalized? Or is it not a danger at all, given what crude core is?
So, Latha, I think I'll side with, at least given what we are seeing, is happening on the food side, and not just in India, but I think we also need to keep an eye on, global food inflation, because El Nino is not a localized phenomena which is just centered in India. I think it is having an impact on a lot of the other Asian economies, as well as, some of the developed markets, both Latin America and the US. So I think given this perspective, I would be a little bit more cautious in projecting where inflation is headed from here on. I think we might be, Upasana rightly said that there are uncertainties related to how weather conditions are going to pan out. But I think we might be underestimating this inflation increase purely because of the fact that if you do see, we know that food inflation, certain parts of it tend to be temporary or transitory in nature. But that being said, if you continue to see inflation printing, headline inflation printing above 6% for the next, 3 to 4 months, I think it will start feeding into core inflation as well. And I think that's something that we also need to kind of think about and worry about.
Oh, yes, of course. The only thing I checked is that edible oils inflation has not risen. We did see a little bit of spike about 3-4 months back in Indonesia in palm oil and sunflower, but that's at least playing to our advantage. But Neeraj, now for the market reaction. Is it just likely to be knee-jerk, or will there be a persistent worry, as Mridul says, that the RBI will tighten?
I think for now, the market will, it's basically a slightly difficult call in the sense that we were all expecting the inflation to go up for this month and the next month But the size of increase is actually what has surprised everyone. Now, we still don't know what the full story of this is in the sense what the next 2 months will do. But clearly, from a bond market perspective, we'll be on the watch out. It is not going to be easy now to talk about a rate cut anytime soon, unless and until we see inflation numbers come back into the trajectory that Reserve Bank has talked about. And mind you, even in that trajectory, we were not seeing 4%. We were still close to 5%, right? So unless and until there is a real, movement towards that trajectory back in the next 2-3 months, I think the market will continue to be worried about where this is going and whether there is a possibility of further tightness of the liquidity or maybe a rate hike at some point in time if things don't settle down well. Okay. So yes, the market will be concerned about that.
Like Mridul said, repeatedly the governor also said that we have instruments other than rate hikes. So, what are the chances, Neeraj, first of all, of this incremental CRR getting into, pushing up lending rates? And more importantly, if it continues on September 8th after the expected review, then does it make it incumbent that lending rates will rise?
So it's possible that this liquidity tightness, before I say that, what happens on September 8th is not just dependent upon what happens to inflation or what has happened to inflation, also how the liquidity plays out between now and September 8th. So if the liquidity continues to be in a surplus of, say, 2 to 3 lakh crores that it is right now, then the possibility of this incremental CRR hike getting extended beyond September 8th, to my mind, rises considerably. But if the market liquidity comes back into, say, about 1 to 1.5 lakh crore number, then I think there is no reason for RBI to continue with this incremental CRR hike. Inflation worries, coupled with the fact that we will likely to see Reserve Bank siding in the direction of trying to keep liquidity balanced, if not very tight, I think will lead to some short-term reaction in the market. We have seen short-term CD rates and short-term, probably swap rates, etc., go up. Whether that translates into the lending rates as yet, I think there is some time to that. I would think that another 2 to 3 months of this could potentially lead to that outcome.
Okay. Mridul, what is I'll come back to the liquidity and incremental CRR in just a minute, but what are your estimates about whether it could get generalized at all? Or is this just an outlandish question at this point in time?
No, it's not outlandish. It's very much something to consider about. But unfortunately, we do not have information whether or not it will get generalized. The problem with the food supply shocks have been, we have seen that in the past. Sometimes they come too frequently and they get generalized. As of now, we don't have the data to show any generalization is occurring. So there's a comfort on that front. But if, for instance, these prices feed into inflation expectations, and that's what most where the policymakers often tend to go wrong worldwide, is that they sort of underestimate the effect food inflation can have on overall inflation and discount it more than what it needs to be. So that is something we need to guard against. But at the same time, this is not something of a given that you take an action straight away. And the whole point is about living with uncertainty, and the maturity is all about whether you can live with the uncertainty and take the right decisions, internalizing what uncertainty is. And for that matter, this policy did do that. It didn't go overboard. It tried to keep liquidity down. So it was doing the right sort of fine-tuning.
Okay, actually that's well pointed out that food inflation's impact on generalized inflation is important to worry about. I still remember the episode from 2009 to 2013 thereabouts. We called it protein inflation forever, as if the whole world can have a sudden epidemic of eating proteins, when it really turned out to be generalized. So I guess that lesson is learned all over the world. But we have to take a quick break. I have lots more questions on whether we should even debate, or whether the MPC will debate a rate hike. That question after the break.